I just want to show this on the dominance chart real quick. It's just something I saw as I was bringing it up. But if you take these recent lows and you just connect a line right through it, right? So we draw a parallel up and look at what that aligns perfectly to. So what this tells me is dominance is staying within a range right now, and it could get as high as this upper part, which would be near 56%. Downside continues to inch up, so the dominance again is in an upward channel. So the lows are still higher lows. And then, like you were saying, like the altcoins, I got made fun of and bashed so much for shorting altcoins. And then this weekend, I closed out 3 so far for over 20% gain. Because again, it's doing what I've done for 24 years of trading, right? It's looking at charts. I don't care what it is, right? And I think that's the important thing is that, it could be eggs, it could be milk, it could be gold, it could be anything, but there are things that repeat historically. And you look at, for instance, charts of Avalanche, right? Amazing move up, but just a little too high, too fast. And you look for these checkbacks, and yesterday, again, pulling back as low as around 31 after being at 50. I mean, it was an incredible move. And so it's not to say that Avalanche won't do well in the future. I don't think you or I, and will gladly admit that. We don't know where these things are going to ultimately go in the next 5 years. But, they ran too hard. They ran a little too fast. Solana, same kind of deal. And they're just due for pullbacks. And markets obviously are focusing right now on Bitcoin and the spot ETF. Ethereum has lagged not only Bitcoin, but it's lagged altcoins. Like, what's the issue here? What's going on with Ethereum? Why can't it catch a bid? I mean, it certainly isn't performing like some of these altcoins that have gone 2x, 3x, 10x even. Is it just that people are now looking at Solana? They're looking at alternatives? Is it kind of like the breakdown of the future of Ethereum, or is it just a period of time?
Wait a minute, everyone. Get ready for the ultimate crypto investing website, the Bitcoin Seller. It's your golden ticket to an exclusive insiders club. Expert predictions, on-chain data, and breaking news, all for you. Imagine all crypto insights landing in your inbox daily, like having your own expert team. Don't miss this VIP opportunity. Click the link and secure your spot. Join now and ride the crypto roller coaster with the Bitcoin Seller.
Now, just going to my chart on the Ethereum, I just wanted to show people that you have this. Ever since it bottomed out, it's basically stayed within this channel range as well. And what you're talking about, if Ethereum does dip, I have max downside. This longer term trend line, the base of the channel is around the 1650, 1660 area down here. So I don't know if that coordinates with anything, but it is just interesting to look at Ethereum, how it gets to the high end, then goes to the low end, high end, low end, and then we're back just underneath the high end at this point of the channel. That's really gone on for now almost a year and a half, a little over a year and a half since we put in that bottom. For everyone out there, if those of you that were around or trading back in 07, 08, that's basically what happened is the economic data started to slip slowly. Everyone kind of wrote it off because the jobs data was staying so strong. And then once the jobs data started to turn, it was like a cliff dive. And I think that's because on a psychological basis, business owners, they want to believe in the soft landing narrative, right? I mean, we're being told that, the Fed's going to engineer this perfect landing. And so they don't want to fire anyone, right? I mean, hey, if we're going to have a perfect landing and we're going to take back off, like why would you want to let people go that are doing good jobs and then have to come back and find people again, right? Especially during COVID when it was so hard to find people. And so this thought process is that until they really lose hope that the economy is not going to take off again, they're going to not lay off people. And I think that's why jobs data stays so strong until it doesn't, and then it collapses down. The other thing to keep in mind too is, the jobs data on Friday, we know it was good. Yields did rally a little bit, but if you look at today, the 10-year is right back down, negating all of that gain. And there's a lot of talk about that jobs data, even though more jobs were created in the non-farm payrolls than expected. A lot of it was part-time work. In fact, a majority of it was part-time work or people being hired in the government. And I think that also sways people into saying, wait a minute, is this really a strong jobs market, or are people just taking 3 part-time jobs because inflation has wrecked them to the point where they have to be able to pay their rent?
U.S. Securities and Exchange Commission, SEC, Chairman Gary Gensler has advised investors to be cautious when considering crypto investments. His advice followed a series of warnings he issued the day before regarding the risks of crypto investing. The SEC is expected to greenlight multiple spot Bitcoin exchange-traded funds, ETFs, on Wednesday. Jim Cramer, the host of CNBC's Mad Money show, says Bitcoin is topping out. He recently said Bitcoin cannot be killed, emphasizing that it's a technological marvel, and people have to start recognizing that it's here to stay. Cramer's remarks followed a surge in the crypto market, with Bitcoin surpassing $47,000 on Monday, driven by growing optimism surrounding the potential approval of spot Bitcoin exchange-traded funds, ETFs, by the U.S. Securities and Exchange Commission, SEC. Now, let's continue our enlightening discussion with Gareth Soloway.
No, I do think rate cuts are coming this year. I think, though, that the Fed is going to be as careful or as cautious on rate cuts as they can because they are worried about repeating the 80s issues with Volcker and having a spike again in inflation. So my guess is, just like they were behind the curve initially with inflation and raising rates, they'll be behind the curve on cutting because, again, they just worry that, hey, listen, if we see a secondary spike in inflation, that's going to really be a huge detriment. And we know that Jerome Powell has said that many times. He doesn't want to repeat those mistakes. And so that's my guess of what happens is they'll cut a little bit, but they'll be behind the curve. We'll slip into a much worse recession, and they'll have to overcompensate with more cuts either at the late this year or early in 2025. But it is interesting to kind of see it all playing out before our eyes and wondering, where does the stock market end up, right? I mean, we know historically that the stock market, people are always saying, hey, listen, buy stocks because they're going to start cutting rates and printing money. But historically, that's not always the best thing to do. And speaking of the S&P, if we take a look today, I mean, we've seen, we talked about it earlier before the stream, but we saw kind of one of the worst starts to the year on the S&P, on the NASDAQ, with the amount of down days. But one of the things that I like to just mention is that, when you look at the amount of upside that we saw, right? So if we take a look at the move from just late October into year end, you had a 17% move. And so to see what do we get? About a 2% pullback, 2.3, 2.25% pullback. Very, very normal, even though it kind of just happened to coincide with the start of the year. I've been going on record saying that unless we break some key metrics here, meaning this trend line right here, this pivot high here is the one I'm watching, right? So we put a line in there. You can see how you kind of hammered it and then broke out. As long as price on the S&P stays above basically 4,600, I think the S&P actually, I'm in the camp now that the S&P could actually make a run at 5,000 before we really see a bigger move to the downside. Now, if it violates and breaks below 4,600, then that's off the table. But again, it's just right now, it's your run-of-the-mill pullback, and we're starting to creep up already. We know gold's been kind of hammering on a breakout level. It keeps getting rejected. I can show my gold chart real quick here. So here's your daily gold chart. And again, we're still hammering on this level, this 2075, 2080 level, but it still hasn't been able to break through. The chart on gold again. But what we could see back in 2014, 15, 16, 17, 18, 19 is you had very similar price action in that you kept on hammering on at that point, it was the 1370-ish area over, and it got rejected, over, it got rejected, rejected, literally, 5-6 times here. But then you got the breakout. And once that happened, it was a pretty sharp, quick move up to that 2,000 and change level. And so the concept is now you're hammering again on this. And at some point, if you do break out, meaning you close above, let's say 2080 or 2100, you get that bigger move. I think, potentially to about 2500. Yeah, so the Russell, you're right. I mean, amazing end-of-year surge. I think there was a combination of effects that drove the Russell up. I think it went up like 26% from just in late October into the year end. And those factors were is when you had a lot of the other tech stocks, the Magnificent Seven, already up tremendously, people just naturally start looking for where are things on sale, right? It's hard to pay up on Microsoft and on Apple at the 200 level. We know it's pulled back already. So what they did was they said, okay, well, what hasn't run? Let's run this into year end. And then I also think the narrative of a soft landing, interest rates coming down. Remember that the Russell is made up of a lot of companies that are smaller. Therefore, they're not profitable. They have to borrow money. Borrowing costs when interest rates are sky high are death, for these type of companies. So if expectations are that interest rates start to drop, then the Russell stocks do a lot better. So I think that's a combination. Now, looking at the chart, there was a downsloping trend line we broke out of. So on a short-term basis, you buy the retrace to the scene of the crime, which is if the Russell dumps out to 186, 187, that's a buying opportunity. It broke out. If it comes back here, this now becomes support. The only thing that would get me scared on the Russell, and it may happen this year, in fact, I do think eventually it does, is this trend line from the low of COVID to this pivot low going back to November of 2023. If that gets broken, to the downside, that would be big trouble for, that would be a significant breakdown. But right now, at least, and again, keep in mind, I'm looking at a much shorter time frame. I'm looking, 1 month out or so. If this did pull back, I would be a buyer for a quick trade to the upside.
The chairman of the U.S. Securities and Exchange Commission, SEC, Gary Gensler, released another statement regarding crypto investing Tuesday, amid market expectations of imminent approval for spot Bitcoin exchange-traded funds, ETFs. In a post on social media platform X, Gensler urged investors to be cautious if they are considering an investment involving crypto assets. He warned, crypto asset securities may be marketed as new investment opportunities, but there are serious risks involved. The SEC chairman posted a link to an article by Lori Schock, director of the SEC's Office of Investor Education and Advocacy, titled Thinking About Buying the Latest New Cryptocurrency or Token. The article highlights various risks associated with crypto investing, along with offering advice on what investors should do. One piece of advice is don't fall for high-pressure sales tactics, the promise of guaranteed returns, or too good to be true claims, the director noted. Cryptocurrencies may be today's shiny, new opportunity, but there are serious risks involved. Proceed with caution, do your research, evaluate your financial goals, and most importantly, don't flip a coin when you're making investment decisions. Gensler's statements about crypto investing on Tuesday mark the second consecutive day of addressing the matter. On Monday, he warned about various risks associated with crypto investing, and over the weekend, the SEC cautioned investors against succumbing to the fear of missing out, FOMO. Gensler issuing statements on crypto twice this week has fueled optimism surrounding the imminent approval of spot Bitcoin ETFs by the SEC. A decision is anticipated on Wednesday, the deadline for the joint proposal by Cathie Wood's ARK Invest and 21 shares. Fox Business reporter Charles Gasparino shared on social media platform X on Tuesday. Top securities lawyers who deal with the SEC believe Gary Gensler's recent crypto warnings are a prelude to the imminent spot BTC ETF approval. One lawyer reportedly explained to the reporter, "There are no more SEC impediments to approval. SEC is a disclosure-based and process-based regulator. Risks are now known and trading processes are adequate, but you are warned. Risks are super high and processes outside the U.S. cannot be policed." On Tuesday evening, the official SEC account on X announced that the securities regulator has approved spot Bitcoin ETFs. However, a moment later, Gensler posted on X that the ETF approval post was unauthorized, stating that the agency's social media account was compromised. That wraps up today's crypto news highlights. Stay tuned for more updates, insights, and analysis from the world of cryptocurrencies. Please share your thoughts in the comments below. Don't forget to like this video and subscribe to our channel for more engaging content.